Welcome back to this episode of the Crypto Fatcat and the Crypto Skeptic. I am here with the Crypto Fatcat, Mr. Jonathan Levy. Jonathan, what is new in the crypto world?
It's a typical last few weeks in the crypto world. There's been a hack or two. One of the big bridges has gone down for probably ever, sort of sucks. One of the OG DeFi applications, Curve, was attacked as well. And there's concern that there's going to have further reaching implications throughout decentralized finance. That has not proven to be the case through about 5 days of this, but we're still waiting to see if there are other tremors. It hasn't really affected the price of the main cryptos like Bitcoin and Ethereum at all. They're kind of holding fast since last time we talked. Bitcoin a little over 29,000, Ethereum a little over 1,800, and they touched about 30,000 and 1,900 here and there. They're just sort of moving back and forth in that sort of tranche right now. So that's what's up. So it's not great news for the crypto sphere, but it's also not wildly unusual crypto news anymore.
Okay. So what do you mean with this? You made a comment about the bridge being down. What does that mean?
Yeah. Okay, so when you try and move money from chain to chain, like from Ethereum to a different chain, like there's many, one is in fact called Moonbeam, right? And that's a different smart contract platform entirely with its own set of laws and finances and ecosystem and everything. But you can move like digital dollars, for example, from Ethereum there and back. And with some of these places, something like USDC, which is one of the big, and Tether, for example, the two of the biggest stable coins, they're native on those chains, meaning they have value into themselves, right? They are that. So like if I have USDC on Ethereum and I send it to another place where it's also native, then it's one to one, and I can effectively, it's still worth $1 no matter what. But this bridge, which is called multi-chain, um, it touched many, many blockchains, many places where these things are not native. And so when these things are not native, then what happens is the bridge creates its own token to replace the native token. So instead of it being USDC, it's, and this is actually what happened on Moonbeam, it's multi USDC because for multi-chain, right? And so multi-chain basically says this is worth one to one and we'll trade it back at any point and it's fine, right? And then it works great until the bridge goes down, which is what happened. And now all that multi-chain replaced tokens, which are on some of these different channels like Moonbeam and other places, essentially have no value because there's no way to trade them in for anything else, and everyone knows that, and no one wants them either. So some people got holding quite the bag there. I luckily mostly avoided that. Got very, very lightly singed at worst, barely touched me, I'm happy to say. But there was a point not too long ago when I had a bunch of Ethereum as multi-chain Ethereum, like maybe 3 months ago, and was aware of the risk of it actually. And I decided at some point, even though I'm getting pretty good yield on this, I think I could get out, like take my win and get out and get much lower yield, but where it's safer. And pulled it and turned it back into regular old Ethereum on the Ethereum chain and where it's safe. So that's the deal with the bridges. And if the bridge comes back, it's fine, but this one doesn't look like it's coming back.
So there's people who would have lost their fortune or would lost a substantial sum of money because of this.
But there are likely some people who have. They haven't really heard too much about that, interestingly enough. But usually you hear about those people, but I'm for sure some people did, for sure.
Do we
It's still the
know
Wild
what the
West to
market
some degree.
value was of? Yeah. Do we know what the market value was of these sort of multi USDCs that are now worth nothing?
Yeah, I don't know the value. I know that the bridge itself was hit for about $120 million, but that isn't necessarily the same thing as what people who are left holding the bridge tokens is. I don't know at all what that was and how much is out or anything. I don't know if they've mentioned that. The whole bridge just basically closed up shop and stopped existing. So it's really hard to get any of that information. But people aren't screaming about it, but that doesn't mean they aren't badly hurt either.
So this, of course, is the type of thing that people who are not in the crypto world would sort of think this is the Wild West. This is crazy. How can I invest or put money into this given this type of thing seems to happen not too irregularly?
Hmm. Well, the short answer is that there are things you can do to protect yourself, but you actually have to do them, right? So something I learned, and this is the reason why I stopped having my Ethereum on Moonbeam, for example, is that having non-native tokens on chains is dangerous because that means you have a bridge token, and if the bridge is hit, you're screwed. So I endeavor to have zero non-native tokens, and I have for quite a while now. This stuff only matters, by the way, if you're pretty deep into the DeFi world. If you're bridging a coin from Ethereum to Kava or to Moonbeam, you're pretty deep into it. Doesn't mean to say you would know all this stuff, but you're sort of like deciding to be in the Wild West too. You know what I mean? You could, someone like yourself, or even myself, or many people, could decide never to venture that far afield and instead just be, playing in the very basic, easy realm of like Ethereum. Just be on the Ethereum chain. Very safe, fine. All the tokens in there are native. Nothing to worry about. You know what I mean? And like you can do that. But if you want to go further afield looking for yield opportunities, it's risky. As the yield goes up, the risk goes up too. And this is part of that. So you can definitely get caught holding the bag. And I'm not excusing it. It sucks, but that is part of it. So like regular folk would generally not even be doing this a little bit. This is sort of like saying, well, why would you go up in the plane? I heard that space shuttle exploded. It's like, well, yeah, but you don't ever have to get on a space shuttle. You can just fly American Airlines. So it's sort of, I think that's my best answer for that. Anyway.
Okay. And what's the deal with Curve? So Curve is down. What was Curve, and what does it mean that it's down?
Curve was a DeFi place you go, and it was one of its things it was trying to do was keep things balanced, liquidity balanced, prices balanced, things like that. And so they had their own token, the Curve token, and somebody found an exploit in their code and was able to essentially get a lot of Curve tokens for cheap and then sell them all before anyone realized what was going on, and do that to the tune of like 9 figures or something. And so it's sort of ruining all the liquidity on Curve. And there's concern that if, depending on how interwoven Curve's finances is with some of the other applications, how much everyone depends on each other, it could impact other things. Doesn't seem to have. But there was some concern about sort of the tentacles of this, like how far out it might touch things and other lending platforms and the like. But it doesn't seem to have been a problem so far.
Whew. Wow. These do not feel
Yeah,
like really small things. They feel somewhat significant.
they are. They are sort of significant, I must say. I believe this is the kind of thing when, as traditional finance gets more involved, it's all going to be better because number one, I think things will be safer anyway because they won't get involved. They'll make sure it's safe. Number one, but number two, if indeed in a traditional, if you have your Bitcoin through Fidelity and Fidelity gets hacked for all the Bitcoin, I'm pretty sure Fidelity is going to find a way to repay you. You know what I mean? There's no way, like you're going to be insured for that in some way or another. If it's the U.S. government, if it's Fidelity, if it's their partners, I don't think you're not really left holding the bag in the same way in the world of decentralized finance, the way some of us sometimes are, because we are way, way out there on the wild frontier. But yes, no, you're right. This stuff isn't great. It's not ideal, as we would say.
Okay. So, as you know, in the last episode, there were some cracks in the Crypto Skeptic's exterior. And I had come to the
Yeah.
conclusion that Bitcoin in particular was a, something that I was seeing as very speculative before. And I guess questioning to some extent its future. And given what had changed with BlackRock, putting in that proposal for an ETF, which has not been accepted, but obviously they put the proposal in, as has Fidelity and I believe Chase. And so it seems like a lot of the biggest players in the whole financial world who manage trillions are trying to get to a position where they can offer Bitcoin to their customers. And to me,
Yeah.
I know that it hasn't gone through, but it means the probability of Bitcoin having a future 5, 10, 20 years out has gone up substantially in my eyes. And I know you've always played around with those probabilities in your head. And you've pulled the trigger at a much earlier stage of, thinking that even if it was, not a guarantee and long from a guarantee, that the payoff would be so great that it's worth taking the bet, even if, the majority of the time you lose all your money. If you make the bet that works for you and you're willing to do that, then the payoff is so great that for some people it'd be worth it. For me, it wasn't. But I think we're at a stage where I'm starting to dip a toe in the water with Bitcoin as a speculative asset, and sort of hearing more people talk about this digital gold piece and not necessarily agreeing with it, but thinking, you know what? If enough people believe that, and if unlike the Curve token, it really is impossible to hack Bitcoin, and it really can be a form of digital gold that's decentralized and that is limited in its scope. There really are only those 21 million coins. And if you have more people from developing countries like Argentina or South Africa or China who want to keep their money safe from the government or from rampant inflation, combined with then countries in the West, like in the US, where we have this massive economy, and all of a sudden people who have an IRA can put 5% or 10% into um, Bitcoin or digital gold or crypto, which will probably initially be Bitcoin, then I could really, the probability of Bitcoin being worth 100,000, 200,000, who knows what, in 5, 10 years, just seems like it's gone up a lot in my eyes in the last few weeks. So that continues to be the case. And as you know, I bought $100 worth of Bitcoin, and I just wanted to talk to you about that experience of sort of registering with one
Okay.
of the exchanges, and then what it's like as a newbie to then have $100 worth of Bitcoin, and what do you do with that?
Hmm.
Any comments on what I've
So
shared
what
so
was it?
far, just about my overall
Oh,
perspective shift?
I mean, I think it's a very reasonable shift. It's the kind of shift that people like me have been, we thought with, when traditional finance got involved, or if places like Gemini and Coinbase ultimately became traditional finance, one of those two things we were hoping would happen. Um, the former happened, and we were hoping that would be a signal to folks like you that this is the real thing, and then that would then both those things would impact the price pretty greatly, both now and in the future. So all of our plans are coming to fruition. Is kind of what I'm saying. It's really gratifying to hear that that's your take on it as someone who's been more skeptical and outside of all this problem. Having said all that, yeah, what's your experience? What was it like actually going to the exchange, buying it? Was it hard?
Um, I mean, I'm a different case, right? Because here I am living in New Zealand, but I'm from the US. And so that piece was a little tricky, as far as like just, working out the IDs and getting registered. And you can upload a picture of your passport or of your driver's license, and, go through that whole process. So there isn't anything like back in the old day. I know one of the big selling points was that this was something that was more anonymous for how you could send and receive money and how you could participate in this whole crypto world without having all this government oversight. And I know for some people that was a really attractive part of it, certainly for the criminal element, but even for non-criminals who just love the idea of freedom and liberty, and fell on more on that side of the libertarian side of the equation. So that's notable. First of all, that you kind of really have to establish your identity and who you are, and you have to have government issued ID in order to get an account set up, just like you might with the bank. And so that piece they do make fairly easy. You can do it all online with your camera from the computer and putting your ID up there, and it checks all that out and then authorizes you. Um, I found the part about buying some coin was challenging. Um, buying the $100 worth of Bitcoin, you had to either use a debit card, or you had to, which I don't have a debit card, or you had to use this bank sign in process where you put your bank and your bank's, entry code, almost like you're getting into your bank online. Like,
Yeah,
so if I
yeah,
was
plaid.
logging in online to look at my account, yeah. So
Yeah,
right. Plaid. Yeah. I think they were using Plaid. It might be
yeah,
another platform that they were using, but Plaid. So the first time that popped up as my option to buy something, given that I don't have a debit card, I was like, and I backed out and I didn't buy anything. And I thought about it for another day or two. And I was like, I don't know. It just feels like this whole world where all these scams happen, and now you want me to put in my, my internet banking number. And I know this company is supposed to be independent or whatever, but I didn't feel comfortable with that. But I talked myself into it. The next day when I thought about, what, this company's been around for a little while, and they have all these users, and my bank account, I can create it so it doesn't have that much money in it anyways. Let me just do this. And so that was a hurdle for me, though, I will say. And I sort of jumped that hurdle. And then obviously I was off to the races because I had my first $100 Bitcoin little chunk that came in. And then the next thing that I got was a prompt that said, I can't move it for 72 hours. Don't know why, but I'm not able to sort of take custody of it for those 72 hours. And then furthermore, as you know, I don't know how to take custody of it anyway. I got my $100 sitting on the exchange. And if Kraken goes bankrupt, I'm going to lose my $100, which obviously I'm okay with that. There. But if it was a more substantial sum of money, then it would be a worry. Yeah. So that's been my experience so far.
So let me comment on some of that. Okay. So first of all, I understand your reluctance to participate with Plaid. I've certainly gone through that emotional experience too. I think many people have. You don't have to do it that way. You can also ACH money from your bank account. You can wire money from your bank account. So that way you're not giving them your bank details. You're giving your bank their details instead. You're saying, here's my Coinbase account number. Send it there. And you just tell your bank that. And that's another way to go. That's how I move it. So just FYI, you don't have to give them all that information. You're not actually giving it to them, and you're just giving it to Plaid. That's the whole point of Plaid, right? But still, I understand why that would be problematic. That's number one. Number two, just to be clear, the reason why you can't move that Bitcoin for the first 72 hours is not because of Bitcoin or because of Kraken. It's because of the banking situation. Because banks take that long to get finality on transactions. So even though your bank is saying, hey, we're sending this money from his account, for the money to actually completely get from the bank to Kraken's bank and be confirmed takes 72 hours. And that's why Kraken can't let you just buy Bitcoin with money that isn't yet confirmed and get off and leave, right? So they force you to hold it. If you had already moved the money and waited 3 days, then you could buy it and move it right away. So why am I making a big deal out of this? Number one, just so you don't blame Bitcoin for it. But number two, it's actually one of the differences between Bitcoin and crypto in general and the banking system. With crypto, with Bitcoin specifically, I can send you Bitcoin and we get finality in 10 minutes instead of 3 days. Like where the money is actually in your wallet and no longer in mine and confirmed by multiple independent sources in 10 minutes, as opposed to the way the banking system is right now. And this is true for I can do that to anyone, anywhere in the world, as long as they have a Bitcoin app. And they could do it back to me in 10 minutes. So it's a powerful thing that doesn't seem like a big deal because we're so used to swiping our credit card at a grocery store. And from our point of view, we've paid. But from the grocery store's point of view, we have not paid. The bank has promised that it will pay. And they don't actually receive those funds for usually 24 hours to 72 hours. Again, doesn't seem like a big deal, but in certain businesses, that's very important to get finality quickly, or would be if that was possible. This is a massive bottleneck throughout all of commerce right now that crypto actually solves. Now, I'm not saying the infrastructure is going to change dramatically. It's all going to be implemented, but this is yet another potential solution to a problem that most people aren't even aware exists.
Okay. And isn't there something that's happening with the banks or with the Fed where they're working on a digital dollar where there's going to be instant transfers as compared to what's happening with the banking system now? So aren't they trying to take away some of the advantages of crypto by offering that very same service themselves of those sort of instant transactions?
Well, yes and no. They're trying to take away some of those advantages, but they're also shoehorning in a few really big disadvantages to the central bank digital currencies, CBDCs, unlike the digital dollar, the Fed dollar, which is coming. All these things are coming. The government will have total control and surveillance over every single one of their own coins. They'll know where all of them are at all times, can freeze them instantly. That's the kind of money the government wants us to have, right? But I think most people don't want that. One, because why wouldn't you want to actually own the things you own? But on a deeper level, do you always trust the government? I know in the United States, almost no one always trusts the government. Just from the last 2 presidents, almost no one trusts both of them, and both of those administrations. They either trust one or don't trust the other, or trust neither of them. So I don't think you'd want all government at all times to have complete power over all of your money, which is what this would be, what we're talking about. So that would be, I think, hugely problematic. I expect while these things will be made and used to some degree, I also expect a lot of pushback as people realize just how devastating it is that if the government doesn't like something you did or said or tweeted or whatever, they can just freeze your bank account.
Pretty wild, actually, that exists as a possibility. I have this $100 beyond the 72-hour waiting time. What would I do? What would someone do in this situation now to make their Bitcoin safe? So they take it off the exchange so you don't have an FTX situation where the exchange goes bankrupt and you lose your Bitcoin.
Yeah. So what you would need to do is generate a Bitcoin wallet for yourself. And there's a lot of ways to do that. You can do cold storage, which is an easy thing to do, essentially, where you have to pay to buy a cold storage wallet. Like a Ledger is a very popular, and a Trezor is another. Those are the two most popular ones. They cost like $80 to $100, essentially, and they will generate a brand new Bitcoin wallet for you, using not just Bitcoin, for other cryptos as well. And then it gives you addresses that you can then send your crypto to, and then you can self-custody it. That's the easiest way to self-custody. There are harder ways too, where you could actually generate addresses without paying anyone anything. Yeah, Ledger and Trezor are the two most popular cold storage wallets.
How do you? So you're not saying treasure. You're saying something else. Trezor. What? How do you spell that one?
No. Trezor. Trezor. Trezor.
Trezor. Gotcha. And ledger is just like ledger, spelled like ledger.
Yeah.
Yeah. Okay. So I know for you, this is like super basic, super obvious stuff. But for anybody who's just like new to the game, who says, for example, like I want to buy $100 of this stuff, it is, totally new, whole new world walking into where you don't know where the light switch is and you're just kind of fumbling around in the dark. So let's say someone buys one of these cold storage wallets from Ledger or from Trezor. What then? How complicated is this? Could your grandmother, who's not very good at setting up her email, manage to set up a cold storage wallet?
No, she could not. You have to have a little bit of technical comfort and experience to be able to do this. You could do it if you follow the instructions. You have some comfort with like computers and the internet. I did it originally just on my own, never having done it before. Other people do it too, but I think people who are in any way tech phobic are going to really struggle with this piece unless you really walk them through it bit by bit. And usually what ends up happening is friends of mine who buy crypto and they get a cold storage wallet, I usually help them with it. I usually like answer all their questions so they feel really comfortable. And even if they could do it on their own, they mostly don't.
So it's quite a bit of friction to kind of getting involved and getting yourself a little slice of Bitcoin, isn't there?
Yes, there is a bit of friction right now. That's going to change as traditional finance comes in, though, and you'll be able to just hold it in your Fidelity account or your Chase account or whatever, your BlackRock account, whatever it is, right? Or you're in your ETF just with the rest of your stocks. You don't even think about it. We're just not there yet. This is still early days. But yes, right now there is friction if you want to self-custody. Not tremendous friction, but some. But there are rewards for that too. Like, someone gets in earlier, there's more, you get a bigger payout on the other end. If your $100 that you bought today, had you come in 10 years ago with $100 worth of Bitcoin, you would be doing incredibly well right now. You would have, God only knows how much Bitcoin. You might have 5 Bitcoin for that $100 or more. I don't know exactly what the prices were exactly 10 years ago, but and so if you had figured that out and you were willing to do the work to figure it out, which I had to do a year and a half later, didn't get in at those prices, but still got in at pretty good prices. I was willing to do the work. I did the self-cussing. It was a little like touch and go at times. I didn't really know if it was working or not, but ultimately it did work out and I was able to hold those coins. And that sort of has been the basis of the last several years for me now, like the fact that I made that decision and did that. So that's true for you right now, though, too. Maybe not at $100, but if you were to make a more sizable investment and do the work to self custody, that likely, if this stuff blows up the way we think there's a very strong chance it will at this point, maybe me more than you, but still, like that's the payoff. That's what you get paid. That risk or that difficulty you're getting paid for. And if you want to wait until it's Fidelity and everyone else has it, you just press a button and it goes in your account. That's okay too. But likely Bitcoin will be at a very different price point, and you can't, you just don't get paid for that little extra, that pain point, which you'd have to go through. So you can do it any way you want.
Yeah, definitely you're more bullish on the long-term prospects for Bitcoin than I am. That still continues to be the case. I'm concerned about the regulatory environment and what types of competitors might emerge, from the government where they sort of really tried to shut this down. And I know that, Bitcoin was banned in China, but there's still a lot of trading that happens amongst Chinese people. I think they're, one of the top countries actually for trading crypto and Bitcoin, even though it's banned. But just looking into that lightly, it seems like that ban is just not as stringent as it could be. Almost like it's a ban where the government is kind of winking and allowing people to continue to invest. And so, what would it be like if the U.S. government or all of the G7 countries came together and they had their own digital dollars, which they want to do because they want to control the money, and they had really stringent regulatory environment for those on ramps and off ramps, so that people who were all the retail investors around the world just found it really, really difficult to get Bitcoin or to turn it back into dollars to be able to use it. Then does that mean Bitcoin is then worth $2,000 a coin rather than 30,000 or 300,000 like we think it could be if it was more broadly accepted and you could buy it in an ETF and put it in your IRA, and everybody can hold it sort of readily and easily?
In that scenario, yeah, Bitcoin's value would be much less than what I'm picturing for sure. I don't know if it's 2,000 or 5,000 or 1,000 or 50,000, but it would be less than whatever I'm imagining it would be down the road in those spots. However, what you're describing, that environment, that ship has sailed, buddy. BlackRock and all the traditional finance players have filed for Bitcoin ETFs. The government has stopped attacking crypto. They were coming down super hard on it until the moment BlackRock filed for that ETF, and the Biden administration hasn't made a damn peep about crypto since. They've just been super quiet because, who's really in charge here, right? I think we're past that point where I think at this point, it's very clear to me anyway, regulation is coming, and it's going to be relatively welcoming regulation. I'm not saying it's going to be perfect. I'm sure there's going to be things that someone like me is going to find annoying, but it's not going to be something that's going to try and choke the life out of Bitcoin. I think that's all already gone and done. They had their chance. They missed that window. We're past it. I think it's over. That part is over. Maybe they can choke the life out of some of the smart contract and other coins, things that they are labeling securities. I don't think they're going to be able to successfully do that either. But Bitcoin, they've already stated many times it's a commodity, not a security. And everyone is kind of at this point starting to make really clearly nice with Bitcoin. Even Elizabeth Warren, who's been super down on it forever, really hasn't said jack. And since BlackRock filed their ETF, right? No one's saying anything anymore because I think they all see the writing on the wall, or, are being told what to say, depending on your perspective.
The other thing that kind of just, I thought, made me laugh a little bit in a, not in a way where I was enjoying one particular guy's pain, but, the idea of digital gold and all this talk about Bitcoin being digital gold. And then there was a lawsuit this past week against Fox News, or against Fox generally, for advertising gold, where they were selling gold, and it was pitched, it seemed like a lot towards retirees and people who were conservatives. And there was a 30% commission. So there was one guy who was named in the lawsuit who lost $180,000 just in the commission of buying a large chunk of gold to store his savings, because he thought he was, the world's falling apart. And so I got to be in gold and the currency is being devalued, so, hey, let me buy through this company that's advertised on one of the most popular channels in the US, the most watched news channel in the US. And they're advertising this stuff that is borderline criminal. If you're taking 30%, the guy's lost $180,000 in commission for buying what is, generally thought of as a very conservative investment and a very conservative store of value. So I don't know. Any comments on either of those things, or do you have something that you want to wrap up on?
Only that gold is something that people really struggle to buy unless they're doing it through some weird, like I saw the commercial on Fox News. I went to some weird convention center and bought it. Not to say those are the only ways to do it, of course, but I would say for the average retail investor, that's a lot of how they might buy some gold for themselves, right? Bitcoin's not going to be like that. I mean, it could be, but it's not going to be. Like, it's going to be available in your Fidelity account, in your Charles Schwab, where you're buying stocks. The Bitcoin ETF will be right there. You can just click it, and then you'll own some, and that'll be that. And there'll be no weird commission stuff going on. Not to say that financial people aren't always trying to take advantage of the little guy. They always are. And in fact, right now there's a Bitcoin futures ETF, which has been around for a while and is horrible and is absolutely like, it waters down the amount of ownership every year pretty significantly. It's a horrible thing. And this is why everyone's been waiting for the spot ETF. But even that ETF, the futures ETF, was the second most popular biggest first day ETF in history. So the spot ETF is going to be unbelievable. But yeah, I think people are going to be more protected as traditional finance comes into Bitcoin than they have been with gold, for the most part. But I mean, I guess people can always can get taken to if they're not careful, and that's the sad thing. All right, with that, I have to run. I think you do too, but I know I do.
Okay, great to see you, and look forward to the next one.